Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as you can see, the Australian dollar attempted to stage a rebound beyond 77 cents today. It got to an intraday high of 77.18 and reversed. One thing to note is the 60-day moving average is clearly playing a big part in the terms of trying to see if the bulls can reinstate the upside, because today was rejected. Along with that is the technical aspect. You can see we are still remaining under the midway point at 50, and with the bearish sentiment holding to the MACD does indicate that I still hold the view down towards 75, 80, 90, and therefore reassess from there. In case we get a break, then we will be looking down towards 74.5. At present, there was a rebound from the key level of 118.40.45 overnight. More to the point, though, is the dollar index, which measures the greenback strength against a basket of 6 major currencies, retreated from the level of 92.50.60 after printing an intraday high of 92.51. It is assessed that from the pullback, we could see a mixed play of directions in terms of both the currencies. In terms of the fact is that the euro is unlikely to break higher, even though it is weighted against the US at 57.6. But I believe the point to make is if the dollar index does break back above the level of 92.50.60, then we could see a correction up to 95. That is a big call, because that in terms would see the euro drop down towards the 116 level. But from a technical point, we still need a little bit of confirmation to the downside, and if we do break this level at 118, so not at 40 anymore because we have broken it, but around 118.15.25, then I would feel that the ADX will strengthen to the bearish trend and put in place the target of 116 figure. Well, there was some divergence at one stage for dollar yen, but the rejection above the 109 level has given some indication that the market is having a bit of a struggle here. There's only one backing I can see it from a takeaway picture of this technicals, is that the ADX is holding to a bullish stance but somewhat overheating. Let's see if the market can break underneath 107.70. That's the trigger point to the downside, but at this stage it seems that the bulls are still maintaining and in control unless we do see that break. The pound is still playing around with this level of 138.30. We didn't get quite a break, but the technical aspect did reject the midway point, so we should not rule out another test towards this downside. I'm still keeping the view towards 135.60 as a potential target. A lot of choppiness when it comes to sterling yen, with both legs pretty much trying to attempt to reverse the current patterns, has pushed the cross currency to its extreme. But there is divergence here, and therefore I do feel that we are potentially going to get a rejection and look back towards this trend line seen around 146.80. Wrapping up with gold and oil, well, the market kicked in overnight with a bullish divergence, as you can see here, and from that broke above the midway point. The longer we maintain above 1,700, could see a rise up towards 1,765. But that being said, let's see how the market plays into tonight, where we close. And New York's close will give us an assessment tomorrow on how strong this bullish divergence is. And we got a strong rejection from that 67 and 3 days of bearishness since then. Looking at the technical aspect, I feel the market has broken down, and if we see a close under 63.15, then we should see a drop to $58 a barrel. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the interest rate report, and hope you enjoy the rest of the day.